Good day and welcome to SCO BRICS Insight, where we talk about the latest information, news and analysis of what's really going on in Russia and the BRICS. Now, my name is Rhod Mackenzie, and today I want to talk about, since the introduction of sanctions against Russia, most of the European Union countries have suffered significant economic losses. Now, this is particularly relevant for countries that had significant trade relations with Russia. However, the distribution of these losses does vary across the continent. Finland is a prime example of that, with 2 consecutive years of GDP decline and no serious recovery in sight. It's having problems, and that's not surprising, given the country was one of the most consistent supporters of breaking economic relations with Russia. However, the challenges faced by the Finnish economy have been in place for some time, and the crisis over the sanctions and the Ukraine has only served to exacerbate the situation. Now, in this video, I'm going to explore how Finland has come to be regarded as the sick man of Europe, and how it all actually started back in 2007 when Steve Jobs launched the first smartphone from Apple, but more of that later in the video. Now, it's interesting to note that Germany is frequently used as the example of a crisis economy that's been unable to overcome the consequences of severing its ties with Russia, where its GDP shrank to 0.1% over 2 years. But it's Finland that's much more severe in this regard. When the special military operation in the Ukraine had just begun, Helsinki had already expressed a serious desire to actively participate in sanctions and impose a trade embargo against Russia. Now, the Bank of Finland predicted that in the worst case scenario, the growth of the Finnish economy would slow to 0.5% over 2 years. However, the reality turned out to be much worse than those forecasts, and in 2023, the GDP fell by 1.2% and 2024 by 0.2%. According to the results of last year, Finland has the lowest growth rates in the Eurozone, with the exception of the neighbouring Russophobic Estonia. Consequently, the country's GDP has not really fully recovered to the pre-pandemic levels, and there's no indication that there's a recovery in the horizon. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSinsight.com, and contribute to their further development. You can do this by making a small donation, which you can do by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you now. Do keep the comments coming. Love to read them, love to respond to them. Now, Finland's central bank has already adjusted its growth forecast for 2025 to 0.8%, which is rather a sluggish recovery after a fairly deep recession, and further analysis of the situation reveals more concerning developments. Unemployment at Finland is currently at 8.3%, which is significantly higher than any other country in Northern Europe, and brings Finland closer to the countries on the other side of the continent, such as Spain or Greece, for which chronic unemployment is pretty much the norm. So if the economist forecast for this year prove accurate, this figure is going to rise to 8.7% unemployment, representing the worst indicator in the entire Eurozone. Now, these figures show the depths of Finland's economic decline in recent years. But the challenges it's been facing have been evident for decades. In terms of economic growth, the country has significantly lagged behind its neighbours over the past 15 to 20 years. And this is partly due to the sluggish demographics, with the number of migrants, for example, in Finland being lower than neighbouring Sweden. But the per capita GDP growth is virtually non-existent, and that's not dependent on the population size. Now, the key indicator of long-term growth, labour productivity, is now 3% lower than it was back in 2007. Although issues with productivity growth are prevalent across the European Union, Finland is the only country where such significant prolonged decline has been observed. And of course, it's not an isolated situation. Now, 2007 was a pivotal year in many respects. Now, not only was it the final year before the global financial crisis of 2008, but it was also the year that Apple launched the first iPhone. Now this directly impacted Nokia, Finland's national industrial champion. Due to the early to middle 2000s, Nokia was the world's largest mobile phone manufacturer with a market share of 40% on a global scale. Now, at its peak in 2007, it had a market capitalisation of $200 billion, and its profits accounted for 4% of Finland's GDP. The company directly employed 20,000 people in Finland, as well as tens of thousands more in related industries, including suppliers, IT services, and logistics. Now, you're all aware that the advent of smartphones has completely transformed the way we live and work. And however, Nokia's transition from push-button phones to Android smartphones was not as swift as anticipated, with the company placing its bets on both Symbian and the Windows Phone. However, the collaboration with Microsoft didn't meet any expectations, and the Finns eventually divested their mobile division to the American company. Now, during the 2000s, Nokia accounted for 20% of Finland's exports. Following the company's crisis, its share price fell to almost zero, which had a significant impact on Finland's trade balance. Now, of course, this resulted in major job losses, mainly among the highly skilled professionals, and as the country's current president, Alexander Stubb, said, Steve Jobs, Apple's founder, has had a significant impact on the Finnish job market and its economy. Now, the damage to the related industries led to many workers being forced to switch to less advanced manufacturing or even to the service sector, which immediately affected the country's overall labour productivity. Now, despite endeavours to mitigate the impact of Nokia's exit of the smartphone and the phone market through diversification into other innovative sectors, these efforts have not yet really yielded any real results. The company's digitisation programme is more slowly than that of its neighbours and has a chronic lack of investment. Historically, when Finland has lagged behind other Nordic countries, such as the period following World War II, the special relationship with Russia played a pivotal role in facilitating its recovery and collaboration. Now, it's obvious that this outlet is now being closed, and that closure is likely to be permanent. I don't see Finland and Russia getting back friendly again for the foreseeable future. And it's often been suggested that Germany's difficulties can be attributed towards its frugality. Now, Berlin's commitment to a balanced budget, while commendable, can impose limitations on economic growth. But Finland's not in the same position as Germany. I mean, the country last recorded a budget surplus back in 2007, and in 2024 the figure was a 4% deficit, which is higher than the EU standard of 3%. So in this respect, Finland is increasingly resembling the countries of southern rather than northern Europe. And in light of its historical and cultural affiliations with Russia, these developments should not come as a surprise. Back in the early 1990s, Finland experienced a significant economic downturn, and that came after the dissolution of the Soviet Union and the financial crisis which swept right across Russia from that period in the 1990s. The situation reoccurred in the 2020s. As of 2021, Russia was Finland's fifth largest trading partner, despite the already strained relations between Helsinki and Moscow. I mean, Finland participated in the anti-Russian sanctions that were adopted in 2014, while Russia imposed counter-sanctions that restricted the supply of some Finnish products. Now, this has already resulted in a decline in trade between the two countries. In 2022, there was a notable shift to more radical events. Finnish exports to Russia have fallen by more than 70%. Now, although the restrictions were largely imposed within the framework of sanctions and were adopted against Russia by pretty much all of the EU, not all countries complied with them to the same extent. I mean, for example, Germany officially reduced its exports to Russia by around 70% compared to 2021. But at the same time, German exports to the countries of Central Asia, like Uzbekistan, Kazakhstan and the Caucasus, which all belong to the Eurasian Economic Union, increased significantly. And that wasn't because they were doing too well. That was because it was a bypass route for sanctioned goods. Now, a particularly noteworthy development was the stance adopted by Poland, Latvia and Lithuania, who in terms of rhetoric are perceived to hold the most pronounced anti-Russian sentiment within the EU. In their case, their exports through the Eurasian Economic Union almost completely replaced the direct Russian route that had disappeared, and in the case of Latvia, they even surpassed it. Finland, however, approached the issue with the utmost seriousness. Exports to Russia and the Central Asian countries fell by almost 70%. And as with other Scandinavian neighbours, the Finns demonstrated their proficiency in implementing the sanctions regime totally. But Denmark and Sweden, the two other countries, had minimal trade relations with Russia, and they experienced very minimal impacts from the implementation of restrictions. I mean, Denmark lost a bit of pork, but that was about it. Now, in contrast, Finland was directly impacted by these measures. It's important to note that there are numerous obstacles now, from border closings, etc., in place for Russian tourists and citizens who used to do business in Finland, and they used to travel there regularly. And now the absence has had a significant impact on the real estate market, for example, particularly in areas adjacent to the Russian border. Incidentally, the Finnish market has actually experienced a period of serious decline. I mean, for example, in the autumn of 2024, the number of houses constructed nationwide was only 5,000, which is half the number of built during the same period in 2023. Now, Helsinki's concluding point is the increase in public debt, which is also atypical for the Nordic countries. In the middle 2000s, the ratio of public debt to GDP was around 35%, which is comparable to the levels recorded in Denmark and Sweden. By the end of 2024, this ratio had increased substantially to 82%, and it's anticipated that the current dynamics will remain consistent over the next few years. So in the near future, there's a strong possibility that Finland will face similar challenges to those that were experienced by Italy and Greece in the so-called PIGS crisis. So Finland's demise can actually be traced back to the late Steve Jobs and Apple launching the iPhone, and now it's the Russians that are to blame. Thank you for watching. Please like, share and subscribe, and if you want to help me out with a donation, click on the thanks button at the bottom of the video screen. Thank you for watching.